live, man. Okay, hi everybody. I'm joined with by André Cardoso, and André has a methodology that we haven't had anyone here at TradeGATEHub talk about. It's Harmonics. Welcome to TradeGATEHub. André, how are you? I've known you for a while.
Thank you very much.
I think your work is excellent, and looks like you prepared something for us.
Yes, I did.
So
Thank you.
why don't you, before we get going with what you prepared, why don't you tell us a little bit about what attracted you to Harmonics? And actually, I'm wearing my musical shirt, which music is harmony and harmonics.
Of course it is.
Everything's harmonics. Nature is harmonics. So tell us how you found harmonics. How did it happen?
Now that you refer to that, probably that's all synced. I'm very connected to Earth. I'm very connected to people. I'm very connected to music. So probably there's a connection also there's a reason also behind my interest on harmonic trading. But more specifically, of course, in the technical perspective, behind those harmonic tradings, those harmonic patterns, we have a very decent risk-reward opportunity to trade and to get involved with the market. And that's one of the main reason why I search for those advanced patterns, because they allows me to identify a very specific price zone to get involved and a very specific price zone to get out as soon the market confirms that I was wrong.
Okay, you were telling me a story about coffee trade that you got involved with. Go ahead.
That was my first trade in 2012. In the summer 2012, I took a small short on coffee. Without knowing how to read the market. So I became unemployed before that period, and I started to get involved in the learning process to try to learn all these patterns and all the market behaviors. And I decided to take a shot on coffee without knowing where to put my stops, where I should exit my trade. And I decided to short coffee. And for 3 or 4 days in a row, the market starts to sink. And that gives me a financial comfort zone to start to develop and start to get enthusiastic with the market. So
was that off a harmonic pattern, that trade?
No, not at all. I was not connected with harmonic trading at that point. Then
I flip a coin.
I flipped a coin, basically. Basically, that's what happens. Most of the times, most of the people will lose that trade because they don't know what they are doing, and most of the times we will lose that trade. But in my case, fortunately that became one of my first trades and successful trades. But that triggers me the interest to learn more, and then I started to read about what other traders are saying at that point, and I realized that there were a lot of psychology issues behind trading and our emotions, how to control our emotions, what tools can we bring to our strategy in order to control those emotional reactions that we have inside the market. So I need some tools, and then I joined one of the biggest platforms online, and I joined TradingView as a community. I started to be connected with other traders, and I started to learn other process. And then suddenly someone started to share some harmonic patterns, and I started to think what kind of strategy is this. And I started to learn about Scott Carney, Larry Pasavento, Leslie Jofflers. I read all the books from Larry. I learned a lot from
I know him. Larry. Another dinosaur.
I know that. Yes, another dinosaur.
The other guy thinks he invented harmonics. Scott Carney.
Scott Carney identified the few other patterns that at that time nobody was capable to identify. Okay,
so he did discover a few things.
He did discover a few of them, and I think he has registered a trademark on some of them. But specifically the shark pattern, the crab pattern that I will show you in a few seconds or a few minutes. But the Gartley pattern, it was found initially, as I said before to you, in 1935, I believe, from Arnold Gartley, which gives a name to the pattern, and that pattern was discussed in the book from Larry Pasavento, Trade What You See: How to Profit from Pattern Recognition. So that's one of the books where you can find the Gartley pattern very well explained, and all the ratios and all the psychology behind those movements. So very similar.
You were telling me that there's 6 patterns you want to share with us today.
There are 6 patterns, and all of them are based on human reaction, as very similar as any other strategy you trade inside the market. They are supported by all the intervenients, retail traders, big institutions, whatever. They all connected. They make those patterns to work, and sometimes they will fail, of course, very similar to any other strategies. So one of the patterns that I want to share with you, this is the bearish, as an example, this is a bearish shark pattern, of course, a reversal pattern as a bullish shark, but this is a bearish shark pattern ratios that I tend to search for. So basically this pattern, it's composed by 3 major moves. So let's say an ABC correction, usually by default, an ABC correction, followed by a very strong impulsive momentum searching for an extension. So this extension is a 161.8 extension of the last swing low. So the completion point of this pattern will suggest then a retracement. So, and this is just one of them. Of course, I will show you a few others. I have also a few telegram here, which explains how to approach all those levels, because they are supported by the Fibonacci ratios, as you already know. Another pattern is the crab pattern, very similar behavior, and it finishes with a very strong impulsive swing. In this case, in this example, I'm using a swing low, so that pattern also, once completed, will suggest a bounce after the completion point. Another one, the cipher pattern, and this one is very, very friendly for some of us, because it will be formed with 3 major sequences. One of them searching for the 127% Fibonacci extension of the first swing low.
So and Fibonacci is an important part of this.
It's a very important part of those patterns, because the difference between some ratios will form different patterns. So we need to pay attention to some of those Fibonacci levels in order to identify the completion point of those. So, but the cipher pattern will requires, let's say, a bounce towards the 78% Fibonacci retracement from all the sequence, from all this fall. As soon as the market achieves that 78% Fibonacci extension or retracement level, we expect a retracement. Another one is the bat pattern, the so-called the M or the W shape behavior. So it's a very similar pattern as a Gartley or cipher pattern. We expect, as soon as the market completes at 88.6% Fibonacci retracement, we wait for the pullback after.
You're also trading these patterns before they complete. Are you not?
Not the case. I can try to take advantage of the structure. I can show you a few examples in a few seconds, Dale.
Go ahead.
But just to finish, this is the butterfly pattern, which requires an extension above the starting point of the pattern to the 127% Fibonacci extension. So this is the 127% Fibonacci extension of this swing low projected above. So as soon as the pattern completes, we expect price reaction. And to finish, this is another one very similar to the bat pattern, the Gartley pattern, and this one is formed between the golden Fibonacci retracement level. So we have,
and what's that, 1.618?
61.8% Fibonacci retracement of this swing low, and then the 61.8% Fibonacci retracement of this swing high.
Okay.
So if the market fills those Fibonacci retracement levels, the golden fibs, then we wait for the 127% Fibonacci extension. So basically, Dale, we are seeing one A, B, C, D pattern. Okay. So as soon the market completes the 127, 141% Fibonacci extension of this swing, that will complete the pattern. But this specific pattern actually requires those specific golden Fibonacci levels to be reached. So, and doesn't matter what we are trading, commodities, the stock markets, the forex market. The most important factor that I found most valuable to trade the market is the risk that we use to trade the market. And it doesn't matter what market we are trying to get involved with. The most important factor is the risk that we take, because we can be wrong, and if you are wrong, we need to be here in the next day. So
that's the only thing we could control is how much.
That's the only thing we can control. The position size will define the amount of risk we want to take in a specific trade, in a specific time frame, in a specific pattern, a specific instrument. So we need to get all that synced in order to prevent our accounts to burn. Which already happened to me recently. So
who hasn't it happened to?
I think it needs to happen in order to ourselves to realize how dangerous this is and how disciplined we need to be. And we have the privilege to work, in my point of view, in my humble opinion, with one of most disciplined traders that I know at this point, which is Blake Morrow. So I can't discuss about that, because it's amazing the performance he presents, the discipline he puts in his trades, and actually on a daily basis it's very difficult to follow that process. So it requires a lot of discipline. So
he spends a lot of time. He's a hard-working technician.
Yeah,
he spends hours upon hours doing analysis.
True.
Hours. True. So very disciplined about doing the work. I don't care what you use.
25 years. It's a lot, and same to you, Dale. I can't imagine the knowledge that I will acquire during these periods. I can't.
You mean like imagine after 100 years in the industry?
After 100 years, I don't know what how I will feel on that.
Yeah.
On that
so
time,
I mean, trading isn't for lazy people. You have to find a money manager for that. So you have to put in the time. So okay, we're looking at S&Ps right here.
Yeah, S&P. As you know, I pushed a few options to try to go short. We have a very strong divergent market, as you know. But at this point, as well, it's not surprising for me. We have been seeing this kind of a behavior for SPX 500 very recently in the previous months and the previous trading sessions, where when the market starts to sink, everyone starts to get excited with that, and the market starts to print a full recovery. Now I have another pressure zone for SPX 500, and it goes in convergence with your last guest at
Peter,
yeah, which points to 47.15 or 47.50. I don't know, I'm not sure. But we have another Fibonacci level which may represent another pressure zone for SPX 500. Until there, I will not dare to touch again SPX 500.
And I'm curious if you have anything on something that I thought was probably surprising people. We had that big washout in metals yesterday, but the miners turned, and gold and silver are following through to the upside today.
Yeah. Well, I posted yesterday, I was expecting the formation of an alt-bat pattern at 113% Fibonacci extension. This kind of a yellow, or in this case, a gray pattern. So I was expecting
that. It by $3.
We missed it by $3. So I was expecting the golden Fibonacci retracement level convergent with that Fibonacci extension to offer some pressure. We have also one eventual trend line support approaching from below. So I was expecting somehow the formation of that pattern. So as you can see, the market has failed that.
So what do you do when you
point.
miss a trade like that?
I don't do nothing. If I have a pending order to trade, if I miss the trade, I miss the trade, I cancel and I move on and I wait for another opportunity.
Okay.
Just to answer your question, Dale, can I trade different market strategies or I wait for specific harmonic patterns to trade? So, and this is one of the examples that I want to share with our viewers. And this is one of the most amazing patterns that I found and that I studied for a long time. And this is the bullish 2618 trade setup. So Blake Morrow identified this behavior as edge and shoulders, as an inverted edge and shoulders. But at the same time, the market prints this head. We have a technical double bottom right there. We have the second bottom retesting the close price of the first one and then rejecting to close below it. So, and this is the second criteria that I tend to search for to identify the technical double bottom after a V-shape, a perfect V-shaped configuration here. So we have a V-shape and we have the close price closing above the close price after a retest.
NASDAQ made a new low without the S&P down there.
Exactly.
I remember I covered NASDAQ shorts down there.
Then when the price confirms the technical double bottom, it prints a resistance and pulls back to the golden Fibonacci retracement level. So first of all, we need to confirm the double bottom, and that will only happen with the breakout of the next zone. And as soon the price finds resistance, we wait for the pullback to the golden Fibonacci level. So I pushed this trade with the communities I work with. So I pushed this opportunity to get involved. And by default, we search for an ABCD pattern or kind of a symmetrical projection, which tends to be projected at 127% Fibonacci extension of the first swing high. That pattern can also extend to the 224% Fibonacci extension. So this is an extreme target for the bullish 2618 trade setup. And as you can see, as soon the price finds this Fibonacci level, actually we have a fractal resistance right there. It found some pressure and then it starts to fall. And completing also this bearish crab pattern at the golden Fibonacci extension level. So that's the reason why I was expecting some bearish pressure at this price zone. But to answer your question, yes, we can try to identify different price behaviors in order to try to get involved. So I don't need to wait for a specific harmonic pattern to trade. I can try to identify other simple or more basic patterns to get involved. And that's it. So for silver, and returning to the metals, we have kind of I need to measure this because we have already, I believe, achieved, or we are very close to the 200% Fibonacci extension level. So this is the default target for these edge and shoulders printed below. So we have kind of an inverted edge and shoulders there. We have also the 88% Fibonacci extension. So if we take a measurement from these lows above this cup and handle formation, if we take a measurement from these lows, we can identify what I call an internal bullish bat pattern at 88.6% Fibonacci retracement level. So I was also expecting the same way I was expecting a deeper pullback from gold. And I was expecting the 113% Fibonacci extension. I was expecting also the same for silver, one approach the golden Fibonacci level in order to try to take some.
Do you think it still could, or that's off the table now?
It's still a possibility, of course, but I believe with the breakout of this resistance, the previous structure highs, it should trigger a retest of the daily or a weekly fractal resistance 2482. So I believe that a violation of 24 06, it may trigger that retest of these previous structure highs. If the market starts to fail from this price zone, it's still possible to search for these price zones for sure. So, and by the way, this is just a 2 hours time frame chart, so everything can happen. If the price starts to sink,
the daily
we will be forced to change.
The daily looks like it could have. I was looking for a right shoulder to develop. It was kind of shallow.
Yes, I posted that also.
Yeah.
It can actually there is all the conditions to form that right shoulder. I believe.
You think that was it? One day, and that's the low.
I'm not so sure if that will happen, but
because it took a little more time to develop the left
shoulder.
The
left shoulder, yeah. Usually that's what I tend to search for. I search for the time to form that shoulder, and I project that same time to form the right shoulder. But it's possible to find. Actually, we are very close to the golden fib, so that's one of the possibilities there. And we have the lower lows. Actually, as you can see right there, we have the lower lows covering the closes of the left shoulder. So I will not be surprised to see that as a lower low for the right shoulder. But in order for that to happen, we need to see the Dixie starting to fall. And that brings me to these weekly charts for the dollar index. I don't know if you have any questions.
So you're saying that a weak dollar is bearish silver? Is that what you're
no, I'm saying for silver,
strong dollar is bearish.
Exactly. I need to see the Dixie starting to fall in order to see the metal starting to recover. Yeah,
but yet you see some more upside, like 96.
I see more upside, and there's a specific reason for that. We have another technical double bottom right there, which was triggered with the violation of the next zone. And as you can see, the market has found already support at the previous structural highs, previous structural resistance, turned it into support. But we have also an element of pressure, the 200 moving average also covering
what
those
moving average
those
is that,
highs.
Andre?
This is a 200 moving average. This is, in this case, this is a 200 weekly moving average. So this is a very important level, as you have mentioned before multiple times during these previous weeks. The 38% Fibonacci retracement, I pointed these 94.48 as my first target after completing the pattern that we have completed below. The 161.8 extension right there, completing the bullish shark pattern. If you plot this like that, and initially I projected also the cipher pattern at 78.6% Fibonacci retracement level. So this was a projection from October last year.
Any harmonics developing during this advance that you can foresee?
Yes, there's a few patterns that we can start to project, and those patterns will converge with the default targets that we have for this technical
97.30 or so.
Exactly, exactly at the 50% Fibonacci retracement, 96.10, the 200% Fibonacci retracement, previous structure closes of the previous structure major support level. So
battleground.
Exactly. So that's a pressure zone for Dixie for sure, if achieved. So if the market decides to target those levels, we can also project the crab pattern above the golden Fibonacci retracement. So this pattern requires the Dixie to be pushed a few points higher. In this case, a few points above the golden Fibonacci retracement level. But I'm pointing to initially to the 200% Fibonacci extension level, which is the default target for that technical double bottom. Just because I'm targeting that price on, that doesn't mean the price will not fall.
And if therefore don't buy it based upon a projection to the upside.
Exactly.
Right. Okay.
I prefer, if I need to wait for a buy setup to buy the Dixie or to buy dollars, I prefer to wait for the golden Fibonacci retracement to be reached, 91.33. It will print another bullish 26.18, double bottom followed by the 61.8% Fibonacci retracement. And based on that pattern, we can then start to project that symmetrical pattern again, an ABCD pattern, which can extend to the 224, as I mentioned before. So if this happens, we will extend. I can try to search for the 224% Fibonacci extension level, which will put the price around the 100, 101. But it's a step-by-step process. First of all, of course, that the violation of the most recent highs at 94.56 may trigger more upside momentum for the Dixie, of course. But I will not, at this point, inside this range between those fractals, I will not dare to take a short or a long while inside this range. I need to see a clear evidence for the upside down, for the upside momentum, or a violation of the support, or let's say the recover of the previous resistance and the pullback to the golden fib. And even if that happens, nothing assures the market will not trading even lower.
So some great live looks and pretty nice tutorial on the 6 patterns
Thank you very much.
Concentrate on.
Yeah.
You want to show another instrument, or
if you have something that you want to
no, I think
you want me to cover.
I think what's important is that people know if they want to learn about trading harmonic patterns. It looks like you did it on your own. I would need to be asking people questions about it and learning the process. How would people reach you and follow your work and possibly be mentored by you in harmonics? I don't know if you
at this point, I'm not mentoring anyone. I'm just focused on our work at Forex Analytics and our members. I have a small Telegram channel to trade, and where I share some of those patterns to as a kind of as a signal to push some trades. So I have that channel. But I can, of course, I always try to answer anyone who have interest on harmonic trading on those processes through Twitter or with my email address, apintocardoso.
And your Twitter handle again, Andre, is?
Twitter handle is trading jazz. I'm not sure if I changed this.
Trading jazz.
Trading _ jazz. Yeah.
Well, all I could say is boo 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 on the jazz there part. I had a dog named Jazz. So I want to thank you so much, Andre.
Thank you too for having me.
Sharing your knowledge here with our audience and TradeGATEHub. So I wish you
always a pleasure.
Continued success, Andre, and I respect you. And I think your charts are artwork. You should probably be able to package it and sell it for $1 million as an NFT. Do you know what an NFT is?
An NFT?
Me either. Okay.
No, I'm trying to find I'm trying to translate first for Portuguese and then trying to explain that.
All right. Well, this is an NFT. Look at this beautiful thing. It's digital art, right?
Digital art, yeah.
All
exactly.
right. Well,
it's related. I think there's cryptocurrencies related or tokens related to that stuff also.
I can't
my brother is completely insane with that stuff.
I don't know. Makes my head explode. Anyway,
me too.
Andre, thank you so much.
Thank you very much
for hanging out with us here today, and I appreciate your giving spirit to share your work and a few looks of what Dixie and gold and silver.
Yeah.
Very nice. So thank you, my trading warrior brother.
You too. Thank you.
All right. So that's a wrap, everyone. Good hunting the rest of the day. And hope that we've been able to add value to what you're trying to accomplish in a very difficult endeavor. And hope that you've learned some things this week, not just what your P&L is, but you learned some things that work that you could repeat, and that you learned some things that did not work out, and that you journaled it and you don't repeat. So don't just count your pips, count your blessings, everyone. Adios and good hunting.